On this weekly market report for January 27th, we take a look at what just happened in the gold market. Gold delivered a historic performance over the past week, decisively breaking above the 5,000 US dollars per ounce threshold as geopolitical risk, currency volatility, and shifting capital flows converged. Early in the week, markets were buoyed by steady US inflation data and resilient consumer demand. But sentiment quickly turned defensive, following renewed tariff threats from President Trump toward the European Union, tied to escalating tensions over Greenland. This triggered a classic safe haven response, with gold and the Japanese yen jumping sharply in Monday trading. While global equity markets finished the week mixed, and U.S. Treasuries, the dollar, and crude oil initially firmed, underlying flows told a more nuanced story. Sector and regional performance pointed to a rotation out of U.S. equities, particularly mega-cap technology, and into materials and non-U.S. markets, suggesting geopolitics, rather than growth optimism, was the dominant driver. Europe showed signs of gradual recovery. China confirmed 5% GDP growth for 2025, in line with targets, and India saw inflation edge higher alongside a widening trade deficit. A critical catalyst for gold's surge came late in the week from Japan. Rising fiscal concerns pushed Japanese government bond yields higher, prompting a rare rate check by the Ministry of Finance. The resulting sharp reversal in US dollar/Japanese yen weakened the dollar materially, exposing the greenback's long-term uptrend from 2011 and amplifying gold's upside momentum. Against this backdrop, gold not only cleared its long-watched triangle resistance near 4,770 US dollars per ounce, but surged through 5,000 US dollars per ounce, marking a new all-time high. Although rising US yields could pose near-term headwinds, last week's price action reinforced gold's role as a geopolitical hedge and currency alternative, particularly in an environment of growing policy uncertainty and elevated cross-market volatility. If you'd like to keep up with these weekly market reports and stay informed on what's happening in gold and the broader precious metals space, make sure you subscribe to the channel and turn on notifications so you don't miss the next update.